The Netflix documentary, The Tinder Swindler, is all about a group of women scammed out of money by a guy they met online.
Yeah, sadly, this scenario is not that uncommon. In fact, one survey found that nearly 75% of adults say they've had unknown or deceptive money issues affect their relationship.
But there are ways to protect yourself. Jackie Denker has tips to ensure the person who steals your heart won't ruin your financial life. And that's our featured story at the top of the list.
Combining romance and finance can be a recipe for disaster.
For those people who have combined their finances with their spouse or their significant other, that's about 60% of US adults, 1 in 5 of them have admitted to hiding or lying about their finances or their debt.
And this is happening in their day-to-day lives in all different forms.
Think of it as things like hiding cash or a big purchase or maybe even a bank account or statement.
So before you blend your bank account, Shazi Virji, the GM of Credit Services at Credit Sesame, is helping us avoid financial deception. Starting with understanding their finance attitude.
So many people establish their point of view on finances before they even reach their teenage years. They observe what their parents did and they observe what maybe their friends are doing.
And this mindset toward money isn't likely to change. They may be comfortable taking on debt, but you may be committed to living debt-free.
So by identifying whether your partner is a spender or a saver, it then becomes easier to figure out how you may make decisions jointly in the future, such as things like buying a home, buying a car, or maybe even opening a joint credit card together.
You also have to be open to sharing your situation.
Just like how you want to know about your significant other's previous dating history, you want to know about their financial history as well.
Just like a crazy ex could come back to haunt you, so can a crazy amount of debt.
Things that go on in your finances can have a long-term impact on you and on your partner. Things like a bankruptcy, that can stay on your credit report for up to 7 years.
So ultimately, you need to know how their debt affects you.
If they have large amounts of debt that they're paying high interest rates on, it's going to be hard for them to save money for any joint financial decisions that you have coming up in the short term and in the long term, since they may be really focused on repaying back their debt.
And whether you're married or not, your partner's credit score can impact things like buying and sometimes even jointly leasing a home.
So let's say your partner's credit scores from the 3 bureaus are 640, 650, and 660, and yours are 700, 710, and 720. The lenders are going to look at the 2 middle scores, and unfortunately, they're going to go with the lower of the 2. So that would be 650 in this case.
That difference seems small, but it is a big deal.
And that could actually result in thousands of extra dollars spent over the lifetime of your loan on those interest payments.
A bad credit score doesn't have to be a deal breaker, but hiding it can be.
It's never too early or really even too late to start discussing finances in a relationship.
Saving you from losing your savings is at the top of the list.